Hey, welcome back to YT Finance, and this is the channel where I went to business school so you didn't have to, and today we are talking about Palantir Technology stock, ticker symbol PLTR, to determine if Palantir stock is still a good buying opportunity right now, despite their recent earnings report, and considering where the stock price is currently trading at, based upon what analysts think of the company and its future growth projections. Then we're going to talk about Cathie Wood selling a very large portion of her Palantir shares, and why I am not worried about this at all. So we're actually going to start this video talking about Cathie Wood and her overall objectives for Palantir Technologies. So if you didn't know, Cathie Wood is the CEO of ARK Investment Management, and ARK Invest sold many shares of Palantir Technologies. Currently, Palantir Technologies, ticker symbol PLTR, trades for around $11.02 per share. The low-end price target, according to analysts, is $9. The 12-month price prediction, according to analysts, is $16.28, and the high-end price prediction for this company is $25.30. However, like we talked about in a previous video, Morningstar analysts actually think that the fair value price of Palantir Technologies is worth $31 per share. According to 10 other analysts, one analyst says to buy Palantir Technologies, 5 analysts say to hold this company for now because it's going to be a good future investment, and 4 analysts say to sell the stock in the current market environment. If you didn't know, Palantir Technologies is a big data and analytics company that serves both commercial clients as well as government agencies. And going back to ARK Invest sold around 13.5 million shares of Palantir Technologies. That was worth around $150 million just on Friday. And just before that, ARK Invest decided to sell around 4.77 million shares of Palantir Technologies just to test the water out. So basically, the ideal strategy for ARK Invest is to sell the stock right now, because Cathie Wood thinks that the PLTR stock price is going to fall a little further, maybe around $8 to $9, and that's when she's going to reinvest back into Palantir Technologies, and of course we have evidence for this. But first, let's cover why she even sold her shares in the first place. Well, before selling, ARK Invest, according to Benzinga, had around 25.53 million shares of Palantir Technologies, and after liquidating a very large portion of her shares, she slashed her overall investment in Palantir Technologies by around 52%, which is a huge portion. However, she still owns Palantir Technologies in 6 of her actively traded ETFs. The reason for ARK selling is because of Palantir's fourth quarter earnings report, because they missed earnings by 2 cents per share. The consensus EPS, according to analysts, was 4 cents per share, and Palantir only decided to give us 2 cents per share, which missed expectations by around 2 cents per share. However, all of their other metrics were phenomenal, including their revenues, which came in at around $432.87 million for the fourth quarter of 2021, which actually beat analysts' predictions of $417.69 million in total. So basically, Cathie Wood is just selling this temporarily and plans to buy back later at a cheaper price. Otherwise, she would have sold all of her Palantir Technologies and not just 50%. So she is doing what a smart active trader should do, and she is lowering her average cost for Palantir Technologies because she still believes in this company over the long term. However, this begs the question, is Palantir stock still a buy right now, especially after someone like Cathie Wood has sold her stocks? Well, let's look at this company fundamentally. Palantir's revenues have risen around 34% year over year, all the way up to $433 million in the last quarter, which beat estimates by around $15 million. However, the bad news is that according to Motley Fool, their net loss widened from around $148 million to $156 million on a GAAP basis, also known as the Generally Accepted Accounting Principles basis, known as GAAP, GAAP. So ideally, we would want this net loss to be as small as possible and not increase at all. But let's look deeper into this company to see its long-term projections. For instance, how rapidly are its 2 core segments and businesses growing, which would be their government segment as well as their commercial segment. For the full year of 2020, their government segment grew by around 77%, which absolutely dwarfs their commercial revenue increase of around 22%, which gave us on average around a 47% total increase in revenue. However, if we take these metrics and we actually look all the way until quarter 4 of 2021, they have had substantial improvements specifically for their commercial clients. So although they are scaling back in their government revenues in total, and this number is actually decreasing because their government revenues gives them stability, their commercial revenues, which is eventually going to eclipse the revenues that their government contracts are bringing in, that is going to be their true bread and butter, and what is eventually going to turn this company profitable, which we will talk about in this video. When is Palantir going to become profitable? So just looking at the last 2 years, we can see that they grew from 19% to 28% to 37% to 47% for their commercial revenues. So they are rapidly scaling their commercial segment, and all of these total revenue increases and growth numbers are all above analysts and their management's expected CAGR, or compounding annual growth rate, of 30%. So if we can keep the numbers above 30%, we can guarantee revenue beats for the next few quarters. It's funny how critics of Palantir originally claimed that they are going to struggle to expand their commercial business, but as we see from the data up here, they are doing a phenomenal job at doing this, and they are proving the critics wrong. Their increase in commercial revenues were so impressive that specifically their US commercial revenues grew by around 102%, which actually offset any decline or deceleration that we saw over in their government business. For the first quarter of 2022, Palantir Technologies anticipates that they will increase their revenues again by a 30% compounding annual growth rate, which is fantastic news. This is also very good for long-term investors, and they actually anticipate this 30% CAGR specifically for their revenues all the way through 2025, which is amazing growth. 10% is good, 20% is very good, and 30% is extremely good. So if you can find a company that is growing at a CAGR for their revenues of around or above 30%, that company is scaling extremely rapidly. However, what does this mean for their profits? When will Palantir Technologies eventually generate a profit? Well, technically, on a non-GAAP basis, Palantir Technologies is profitable. However, on a GAAP basis, or a generally accepted accounting principles basis, they are not profitable, mainly due to stock-based compensation, employer-related taxes, and other one-time charges. So when will they be profitable on a GAAP basis? Well, let's look at how their adjusted gross margins and GAAP gross margins are scaling throughout time. So we can see that their adjusted gross margins are staying very steady across the board, which is fantastic news, and their generally accepted accounting principles operating margin is actually decreasing quarter over quarter, which is absolutely fantastic news. And if you're ever looking at any financial statements, these parentheses actually means a loss. So we want these parenthesis numbers to be as low as possible, and as you can see, it is dropping very rapidly from 49% down to 33%, slightly up to 39%, then back down again to 23%, and it dropped again to 14%. And if this continues to drop, we could see Palantir Technologies achieve profitability between 2024 to 2026. More good news is that analysts anticipate that the GAAP net loss is expected to actually decrease from around $520 million, which it was in 2021 according to Motley Fool, down to $205 million in 2022, and this is more than cutting that in half. And if we could do this throughout the next 4 years, Palantir Technologies could definitely be profitable by 2026, or really when management decides to stop their stock-based compensation. However, right now, they really want to attract the best engineers that they possibly can, so they are incentivizing high-end engineers with stock-based compensation. So Palantir Technologies is in their growth stage right now, and they are not focused on achieving profitability or even returning positive returns for shareholders right now. In the meantime, they are scaling their company up so later they can then reward shareholders, which is why Palantir Technologies is at least a 5 to 10 year hold. Currently, Palantir Technologies stock trades for around 12 times this year's sales. So their PS ratio, or price to sales ratio, is about 12 times, which is not terrible. However, ideally we would want this to be in single digits. So how does Palantir Technologies revenues and their CAGR, or compounding annual growth rate, for revenues compare to other companies? Well, two companies that I want to quickly compare them to is ServiceNow and C3.ai. So for ServiceNow, ticker symbol NOW, the current stock trades for around $566, and the low-end price target is $466. The average price target is $686, and the high-end price prediction is $850. And out of 36 analysts that I looked at, they all have a buy rating for the stock except one analyst has a hold rating, with none of them saying to sell this company. So how does this compare to Palantir? Well, they have a similar CAGR, which is climbing and increasing at around a 21% compounding annual growth rate for their revenues between 2021 to 2026. Now, Palantir actually has a greater compounding annual growth rate for their revenues, which according to their management is around 30%, so on that basis, Palantir is actually a better buy. However, Palantir Technologies is trading for around a 12 times PS ratio right now, and this company is actually trading at a 15 times PS ratio for this year's sales. So even in this regard, Palantir Technologies is scaling more efficiently than ServiceNow. However, the only problem is that ServiceNow is profitable both on a GAAP basis and a non-GAAP basis. And that's what really differentiates Palantir from ServiceNow, which means that eventually, when Palantir achieves profitability, the stock price could absolutely explode. But now let's compare Palantir Technologies to a company within the same market, including artificial intelligence. So C3.ai, ticker name AI, basically provides AI data crunching tools for government and commercial enterprises, very similar to Palantir Technologies, but not exact. The AI stock currently trades for around $21 per share. The low-end price target for the stock, according to analysts, for the next 12 months is $31. The average price target is $55, and the high-end price prediction is $103. Similarly, 10 analysts, just like Palantir Technologies, currently review this stock, and 4 of them say to buy the stock, 3 of them say to hold, and another 3 say to sell the stock. So currently, analysts are actually more bullish on C3.ai because they actually have a greater CAGR than Palantir Technologies. For instance, for this year, they are anticipated to grow at around a 35% to a 37% compounding annual growth rate specifically for their revenues, and they are just trading at 9 times their PS ratio. And like we want to see in Palantir Technologies, the single digits is where we want to see these companies in. Now, with that being said, C3.ai is a much smaller company than Palantir Technologies, so we really don't know what C3.ai is going to make of themselves over the long term, where Palantir Technologies seems like a decent bet for their long-term growth. However, in the short term, like Cathie Wood is doing, getting Palantir at a cheaper price is going to be ideal. And of course, there's nothing wrong with holding both AI stock and the PLTR stock. So to me, it's a win-win situation if you look at the fundamentals and the overall growth prospects and growth predictions according to analysts for this company. So overall, if you are a long-term holder, Palantir Technologies still looks like a fantastic stock to own if you're willing to hold the stock for at least 3 to 5 years. But I'd love to hear your thoughts down below. Remember to smash that like button right now, subscribe if you are new, and I'll see you in the next YT video.